All right, so we're diving into some pretty interesting stuff today. And, the crypto market, well, it never sleeps, right?
It really doesn't, no rest for the wicked, as they say, right?
Right, exactly. And you flagged this YouTube video for us. Uh, Pretty wild title,
Yeah.
I gotta say. Bitcoin. Dumpying again.
Yeah.
Ivan on tech.
Yeah.
Put that one out there.
I mean, you kind of have to click on it at that point, right?
It definitely grabs your attention.
Yeah.
So we're gonna take a deep dive into this video, break it down, figure out what's really going on, cut through the noise a little bit.
I think that's a great approach because there's always so much going on in the crypto world, right? It can be really hard to separate the signal from the noise.
Yeah, exactly. And, for folks who maybe don't have time to, watch every single video or read every article, we're gonna distill it down to the essentials here.
Yeah, exactly. The need to know stuff, right?
Yeah, absolutely.
Yeah.
So the first thing that jumps out from this video is Bitcoin dropping 2%, and the presenters, basically saying the whole industry is freaking out.
Yeah, 2% might not sound like a lot to the uninitiated, but in the crypto world, that can be a pretty big swing, especially in a short period of time.
Right. And he specifically mentions, meme coins getting totally wrecked.
Yeah, meme coins, those are the ones that are really sensitive to any kind of movement in Bitcoin.
Yeah, if Bitcoin sneezes, meme coins catch a cold or worse.
Exactly. So it's not surprising to see them taking a hit when Bitcoin dips like that.
Okay, so the YouTuber points to this CME gap around $84,800 as a potential reason for the dip, saying Bitcoin was probably going to head in that direction to close it. For folks who may not be familiar with these CME gaps, what are they and why do they seem to be such a big deal in the crypto world?
So CME gaps, these are basically gaps that form on Bitcoin price charts because the Chicago Mercantile Exchange, where Bitcoin futures are traded, it's not open 24/7 like some of these crypto exchanges are. So over the weekend, for example, the price can move significantly. And when the CME opens back up on Monday, there can be this gap between where the price closed on Friday and where it's currently trading.
I see.
And there's this, kind of a belief among some traders that the price tends to move back to fill these gaps at some point.
Ah, so it's kind of like this self-correcting mechanism in a way.
Yeah, kind of like the market has a memory and it wants to go back and revisit those price levels that it missed.
Interesting. Okay, so this 2% drop might not be anything to, panic about. It could just be this technical move to close that CME gap.
Exactly. It's important to look beyond those short-term price fluctuations and consider the broader context, right?
Right, and the YouTuber seems to echo that sentiment, saying, on the big picture, nothing has changed.
Yeah, he's basically saying that despite this little dip, the fundamentals for Bitcoin are still strong.
Okay, so let's talk about those fundamentals, because the video makes this pretty bold claim that Bitcoin is potentially the most underpriced ever in history, based on fundamentals and what they call administration. What are they seeing that's so positive?
Well, they're pointing to several developments on the regulatory front that they see as very positive for the crypto industry.
Oh.
For example, they mentioned that there was an SEC probe into Crypt.com that seems to have just disappeared quietly.
Holy.
Yeah, which could signal that regulators are taking a less aggressive stance towards the industry.
That would be a big deal, wouldn't it?
It would definitely remove a lot of uncertainty and potentially pave the way for more innovation in the space.
Right. And they also talk about businesses in the crypto space feeling more confident about building and growing without this constant fear of regulatory crackdowns.
Yeah, that's a huge psychological factor, right? If businesses feel like they're constantly walking on eggshells, it's hard to innovate and grow.
Absolutely. So this sense of, regulatory easing is a key part of their bullish argument.
Yeah, it seems to.
Okay. And then there are these legal wins. They mentioned the dismissal of the staking lawsuit against Coinbase in South Carolina.
Right.
And a lawsuit against Kraken. These are pretty big victories, right?
They are, yeah. It shows that courts are starting to side with crypto companies in some of these key legal battles, which could set some important precedents for the industry.
Okay, so that's definitely positive news. And then they talk about the potential confirmation of Paul Atkins as the head of the SEC, who they describe as very pro-crypto.
Yeah, that could be a game changer if he's confirmed.
Right, because he would be in a position to really influence how the SEC regulates the crypto industry.
Exactly. And if he's as pro-crypto as they say, he could create a much more favorable environment for the industry.
Right, they even use this phrase, a greenfield grass opportunity for developers and accountants in the crypto space.
Yeah, they're painting a picture of an industry that's ripe for growth, with lots of opportunities for talented people to come in and make their mark.
And all this is happening while Bitcoin's price is actually lower than it was in January and December.
Yeah.
So their argument is that it's massively undervalued.
Right. They're saying that the fundamentals have improved significantly, but the price hasn't caught up yet.
Okay, so it's like this disconnect between the reality on the ground
Right.
and the market's perception.
Exactly. And that's what's creating this opportunity in their view.
Okay, let's talk about ETF inflows now, because
Mm-hmm.
the video highlights 10 consecutive days of inflows into Bitcoin ETFs,
Right.
suggesting that this is a sign of, a shift in who's buying.
Yeah, they're suggesting that the earlier outflows we were seeing might have been driven by hedge funds doing their thing, short-term trading strategies. But now it seems like those guys are out of the picture, and we're seeing more long-term investors coming in, institutions and corporations who are more interested in holding Bitcoin for the long haul.
So this could mean a less volatile, more stable price action going forward.
Potentially. Yeah, if these institutional investors are truly in it for the long term, then they're less likely to panic, sell on every little dip.
Makes sense. And then they bring up Chris Berninski's observation of pessimism being in vogue,
Right.
which the YouTuber sees as a contrarian bullish signal, especially given Berninski's track record of calling market tops and bottoms. It's funny how sometimes the sentiment can be the exact opposite of what actually happens.
It's almost like a contrarian indicator, right? When everyone's super bearish, that's when you should start getting bullish.
Yeah, it's that whole, buy when there's blood in the streets kind of thinking.
Exactly.
And they bring in Plan B's perspective as well, comparing Bitcoin's undervaluation to gold in the housing market,
Yeah.
using metrics like market capitalization and the stock-to-flow ratio. Can you explain what that comparison's all about?
So Plan B, he's a well-known Bitcoin analyst, and he often focuses on Bitcoin's scarcity as measured by its stock-to-flow ratio,
Right.
which is basically the total amount of Bitcoin that exists divided by the amount of new Bitcoin that's mined each year. And Bitcoin's stock-to-flow ratio is significantly higher than gold's, meaning it's much scarcer.
Right.
But its market cap is still much smaller than gold's. So his argument is that Bitcoin should be worth much more than it is today based on its scarcity alone.
So it's undervalued compared to gold based on that metric.
Exactly. And then he also compares it to the housing market, which is obviously a massive asset class.
Yeah.
But he argues that Bitcoin has several advantages over real estate, like portability. You can easily move Bitcoin across borders.
Yeah.
And lack of government control. Governments can't just seize your Bitcoin like they can seize your property.
Interesting. And the speaker in the video really emphasizes those advantages like tax implications,
Yeah.
the ease of transferring Bitcoin globally. It's a pretty compelling case for Bitcoin as a modern store of value, wouldn't you say?
It is, yeah. It's clear that they're very bullish on Bitcoin, and they see it as a superior asset to traditional stores of value like gold and real estate.
Okay, this is where it gets kind of wild because they mentioned this guy they called Josh Mann, who predicted last year that Bitcoin would hit $84,000 on Pi Day.
Right, March 14th.
And it did hit $84,000 on Pi Day.
Yeah, those specific predictions, they always grab your attention, right?
Absolutely. And now he's predicting $400,000.
Wow. Okay, so what do we make of that?
Yeah. It's hard to say, right? It's definitely impressive that he got the Pi Day prediction right, but, predicting the future is a tricky business.
Yeah, it's always best to take those predictions with a grain of salt, right?
Right, past performance is not necessarily indicative of future results and all that.
Exactly.
Okay, they also highlight the influx of new Bitcoin buyers, like GME Strategic Reserve
Right.
and MicroStrategy as potential drivers of a supercycle. What's the significance of these companies adopting a Bitcoin treasury strategy?
Well, it's a big deal because it shows that mainstream companies are starting to see Bitcoin as a legitimate asset to hold on their balance sheet. And when companies like GameStop and MicroStrategy, which are publicly traded, start buying Bitcoin, it can create a lot of demand and potentially push the price up.
Especially if other companies follow their lead, right?
Exactly. It could create a domino effect.
And this leads to the strategy of borrowing fiat currency to buy Bitcoin, which they discuss in the video.
Right.
They specifically mention GameStop and MicroStrategy raising funds for this purpose. What's the logic behind that?
So the basic idea is that you borrow money in a fiat currency like US dollars, which is prone to inflation, and you use that money to buy Bitcoin, which is seen as a hedge against inflation.
Okay.
So you're essentially betting that Bitcoin will go up in value faster than the fiat currency will lose value.
Interesting. It's a risky move, though, isn't it?
It is definitely, if Bitcoin's price doesn't go up as expected, or if it goes down, these companies could be in trouble.
Right. And the video talks about this potential tipping point where fiat currency could become so weak that people just wouldn't want to sell their Bitcoin for it.
Yeah, that's the ultimate Bitcoin maximalist scenario, right? Where fiat currency becomes essentially worthless and Bitcoin becomes the dominant form of money.
Right. And the analogy they use in the video is trying to buy a house in California with, some obscure foreign currency.
Yeah, nobody wants to accept that weak currency when they could get Bitcoin, which is seen as a much more valuable asset.
Okay, let's shift gears and talk about meme coins, which are clearly having a moment in this video.
Oh, yeah. Meme coins always bring the excitement.
Right. They mentioned several trending meme coins like Gaycoin,
Right.
Ghibli, and the Protest Pikachu, but all these crazy price swings and hold activity. What is it about meme coins that just capture people's attention?
I think it's a combination of things. There's the fun factor, the community aspect, and of course the potential for huge gains in a very short amount of time.
Right. It's like gambling almost.
Yeah, kind of, but it's also social. People are interacting online, creating memes, sharing information. It's a very different vibe than traditional investing.
Okay. And they talk about Mubarak dropping in price after it was listed on Binance, attributing it to a classic sell the news event. Can you explain how that dynamic works?
So sell the news is basically when the price of an asset pumps in anticipation of some positive news, like a major exchange listing.
Right.
But then once the news actually hits, the price drops because everyone who bought in anticipation of the news starts selling to take profits.
So it's like buy the rumor, sell the news.
Exactly.
And Binance is reportedly listing another meme coin called Tutorial.
Okay.
And the video analyzes Binance's strategy with these meme coin listings, suggesting it's a way to compete with Solana.
Right.
In terms of trading volume and relevance.
Yeah.
What's the logic there?
Well, Solana has been gaining a lot of traction lately, especially in the DeFi space and with meme coins.
Okay.
So Binance, which is a centralized exchange, is trying to stay competitive by listing these popular meme coins and attracting those traders to their platform.
Right, so it's all about capturing that trading volume and staying relevant in the market.
Exactly.
Okay, they give us a quick market overview as well, looking at the percentage changes for major cryptocurrencies.
Right.
Bitcoin, ETH, XRP, BNB, Solana, Doge, Cardano, Sui. They point out that BNB is relatively stable compared to some of the others.
Yeah, BNB has been a pretty solid performer lately. I think part of that stability comes from its utility within the Binance ecosystem.
Right. It's used for trading fees, staking all sorts of things on Binance.
Exactly. And Binance is obviously a huge player in the crypto space, so that gives BNB a lot of support.
And they also mentioned the strong correlation between Bitcoin and the NASDAQ QQQ and the S&P 500.
Yeah, we've been seeing that correlation play out for a while now.
Right. It seems like Bitcoin's price is increasingly influenced by those traditional markets.
Yeah, I think that's partly due to the influx of institutional investors who are used to trading in those markets.
Right. They bring their trading strategies and their, macroeconomic outlook to the crypto world. And then they compare the volatility of GameStop's stock after it announced its Bitcoin purchases to MicroStrategy's experience when it first adopted a Bitcoin strategy back in August 2020, highlighting how MicroStrategy's stock has actually trended upwards over the long term, despite those short-term fluctuations, and that investors don't seem to care much about their core software business anymore. It's pretty remarkable how that's played out.
It is, yeah. MicroStrategy basically bet the company on Bitcoin, and it's paid off for them so far.
And now GameStop is trying to follow in their footsteps.
We'll see how it goes for them, right?
Right. High risk, high reward.
Exactly.
They shift gears a bit and mention France's BPI. France earmarking $27 million for crypto projects, with the speaker in the video expressing some disappointment that the amount isn't bigger.
Yeah, $27 million, it's not nothing, but it's also not a huge amount in the grand scheme of things.
Right, especially compared to what some other countries are investing in the crypto space.
Exactly. So it's understandable why the speaker might be a little underwhelmed.
Okay, on a more positive note, they talk about the partnership between P2P.org and Colossus Digital to offer non-custodial institutional staking solutions.
Right.
Why is that non-custodial aspect so important for institutions?
Because institutions, they're very risk averse and they don't want to hand over control of their assets to a third party.
Right.
So with non-custodial staking, they can earn rewards on their staked crypto without giving up control of the assets themselves.
Makes sense. So it's a way to reduce their risk and make staking more appealing.
Exactly.
They bring up the death cross discussion as well. For those who may not be familiar with that technical indicator, can you explain what it is and why it matters?
Sure. So the death cross, it's a technical indicator that occurs when the 50-day moving average of an asset's price crosses below the 200-day moving average.
Okay.
And it's often seen as a bearish signal in traditional technical analysis.
Right.
But the YouTuber has a different perspective. He's saying that the death cross hasn't actually been a reliable indicator for Bitcoin. Yeah. He claims it's been more of a bullish signal, or at least not a particularly negative one.
Interesting. So maybe the traditional rules of technical analysis don't quite apply to the crypto market.
Yeah, it seems like the crypto market moves so fast and it's so driven by sentiment and hype that these traditional indicators might not be as effective.
And then they touch on this idea of a shift in focus from the underlying blockchain technology to the applications being built on top of it. They mentioned Polkadot and whether it can keep up with the competition. And they really emphasize the importance of user-friendly applications, adoption metrics like daily and monthly active users. It seems like the days of just talking about consensus mechanisms and, the technical nitty-gritty are over.
Yeah, it's not just about the tech anymore. It's about what you can actually do with it.
Right. The real-world applications, the user experience.
Exactly.
Okay. And then we have the stablecoin discussion. They talk about Tron's dominance in the stablecoin market, which is kind of surprising, given the initial skepticism around Tron and Justin Sun.
Yeah. Tron's definitely had its share of controversy over the years.
Right, but it seems like they've managed to carve out a niche for themselves in the stablecoin space.
Yeah. They're definitely a major player in that market now, and they're not afraid to make bold moves.
And they mentioned the TRX Tron's native token is now available on Solana, which suggests some level of collaboration between these two ecosystems, right?
Yeah, it seems like they're trying to bridge the gap between these two chains, which could be beneficial for both.
Right, because each chain has its strengths and weaknesses.
Exactly. So it makes sense to try to work together and leverage those strengths.
Okay, and then back to Binance's meme coin listing strategy. Imran from Alliance DAO offers the perspective that Binance is doing this to specifically counter the activity on Solana's Jupiter decentralized exchange,
Right.
trying to keep that trading volume on Binance and direct it towards BNB.
Yeah, that's a pretty astute observation. I
Right.
think Binance sees Solana as a threat, and they're trying to maintain their dominance in the market.
But the video also raises this important question about whether relying solely on exchange listings is a sustainable strategy in the long term
Right.
versus fostering actual on-chain innovation and the move towards self-custody.
Yeah, that's a really key point. The centralized exchanges, they have a lot of power right now, but the whole ethos of crypto is about decentralization and self-custody.
Right, so there's this tension between the centralized and the decentralized world.
Exactly. And it'll be interesting to see how that plays out in the long term.
Finally, they touch on the evolving role of centralized exchanges, noting that the reasons for using them are diminishing, except for maybe margin trading and debit card integrations. They mentioned the example of Hyperliquid, which is this kind of hybrid DEX with
Yeah.
centralized elements, and its recent exploit and how they had to modify the Oracle prices, like the lines are blurring between DXs and CEXs.
Yeah, it's definitely getting more complex. The lines are not as clear as they used to be.
So to recap this deep dive, we saw how a seemingly scary Bitcoin dip might just be a technical correction. We talked about the overall bullish sentiment based on those positive fundamental shifts and regulatory developments, the interesting strategies of companies like MicroStrategy and GameStop using fiat debt to buy Bitcoin, the ever-volatile meme coin market,
Yeah.
and Binance's role in it, and the evolving nature of crypto exchanges. It's a lot to take in.
It is. There's always something new happening in this space.
It's true, and that's what makes it so exciting, right?
Exactly. It's never boring.
So considering all these rapid changes and the different perspectives we've discussed, what does this all tell you about the future of decentralized finance and the role of both established and emerging crypto assets? Where do you think we're headed?
I think we're still in the very early stages of this whole crypto revolution, and things are changing so quickly that it's hard to predict exactly where it will all lead. But one thing is for sure, it's going to be a wild ride.
Yeah, no doubt about that. Thanks for breaking it all down with us.
Anytime, happy to help.
And for our listeners, keep exploring, keep learning. The crypto world is full of surprises and opportunities, and we'll be here to help you navigate it every step of the way.
Until next time.
See ya.